All right, guys, welcome to another live stream. Welcome to another live stream. Happy Sunday. Happy Sunday. All right, so I was actually going through my share drive and I found a old Excel file of my trading notes back in 2017, and I thought it'd be interesting to share because this is how I actually got very familiar with the market, learning market makers, learning how to read charts, learning about different sectors and the overall markets, the Nasdaq, the Dow, and so on and so forth. This is kind of how I got well versed with stocks and just reading price action and things like that. Now, I wasn't a successful day trader. I'm going to show you in my notes. You'll see my losses and things like that. But I'm going to show you what I used to do and all the preparation I took and from a non-successful trader, just to show you the level of detail you need to be at when you day trade. Now, I don't recommend day trading these type of stocks. I used to day trade penny stocks. They're very risky, but I know a lot of people when they get into side hustles and things like that, the first thing that comes across the table, or if you go on YouTube and you search, okay, I want to make some side money, what can I do? The first thing that typically comes up is day trading. And you'll see a bunch of people saying they made this amount of money, that amount of money, but they really don't show the detail or the preparation that it takes to actually make money. And most people don't show their losses. 95 or 90, even some people say 99% of traders lose money. They don't make money. They're not profitable. And I still think that's the case. A lot of people will go on Twitter or X and show their screenshots of their gains, but don't show their losses. And there's a lot of people losing money. And again, I'm about to show you my trading notes. If you're not detailed like this, if you don't have a log, most likely you're losing money. All right, so let me share my screen so I can just show you what I used to do. Give me just a sec. All right. So I have two spreadsheets here. When I went into my drive, for some reason I had two spreadsheets, and I think I just wanted to have a backup. And some of them actually had different tabs. And make sure my mic is working. Give me just a sec. Okay. So on the first tab, I had my trading checklist. So on a daily basis, I would write notes for myself to say, okay, these are the notes you need to follow each and every day, and I would add to it. I mean, it started with one and ended up with 20 things that I would go over before I started trading for the day. Right? I didn't want to start trading for the day and then like not look over this list. This list was very important for me because I used to make mistakes, and I used to make the mistake twice, and it's because I didn't write it down and I didn't remind myself, hey, like you're doing this wrong. You didn't make sure not to do this. So before I started trading for the day, I would come to this tab and say, okay, this is my trading checklist, and this is what I would do before I started trading. So number one, it was look at the overall market. And this was important because you wanted to make sure you knew the direction of the overall market. Was the market going to be green for the day? Was the market going to be red for the day? And what this does, it basically tells you, okay, maybe this is a day to go short instead of going long because everything is tanking. Or maybe I could still go long, but maybe I need to wait until an hour or two after market opens so everything can flush out and then you get that bounce. It just kind of depended on where the market was going for the day, and it was important for me to get a sense of that. Now, the way I did that was I'll look at the overall indices like Nasdaq and the Dow, or I'll just look at pre-market action because I used to use Thinkorswim, so you're able to see pre-market action. And that's typically like I think pre-market is all the way up until 7 a.m. or even maybe even earlier, maybe even like 5. But it was before 9:30 because the market opens at 9:30. Or does it open at 9 or 9:30? I forget. I think it's at 9. Let me check to make sure. Give me just a sec. What time does the U.S. stock market? What time does the U.S. stock market, the stock market open? 9:30. So yeah, the market opens at 9:30. So before that, you still get some type of price action. People will start to be putting in orders and start making trading decisions based off what happened at previous day close, or maybe there was some catalyst coming up and they wanted to take a position. But yeah, number one, I just wanted to see overall where the market was going. Two, price action determines if we play a stock. No value, no play. Again, I was playing penny stocks, and if there was no volume, it'd be hard for it to move, right? Some just chopped all day in the same price range. Maybe like from, let's just say I had a penny stock of, and penny stock is anything below, like I was really counting anything below $5, but you really could go up to $10, $10 and below. So yeah, but if it didn't have enough volume, it could potentially just chop all day from, like, let's just say $2 to 210, and there's really no upside. You wanted things with volume, and price action determined that. And you know what price action is, looking at the charts, looking at the volume, getting in early, right? If the market opened at 9:30, you needed to be up at 7 o'clock, seeing what move during pre-market, so that way you weren't caught off guard. So yeah, price action determines everything. If there's no volume, there's really no play. Three, identify risk level for trades. Stick to the risk level. This was very important because if you didn't write stuff down, like let's say you said, okay, I'm going to do this, I'm going to do that, but you didn't really write stuff down, or you didn't identify a risk level, you tend to not stick to it, right? So if I go into a trade and I don't have a risk level, meaning, okay, I want to go along this stock, but if it goes below a certain level, I need to get out of the stock, right? So let's say I was buying a stock for $1 and I said, okay, my risk level, I can't go anything below 90 cents. If it goes below 90 cents, I need to get out of the trade. And if you don't stick to the risk level, you could get in real trouble, right? And that happened to me quite a lot. And that happens to a lot of traders. They don't stick to their risk level. They think they can come up with stuff during the trade. And I could tell you, like, when you start trading and you put that order in, there's a big adrenaline rush. Like, especially because it's your money, and if you're new to trading, it's really an adrenaline rush. You can honestly compare it to going to a casino, and maybe even more, right? Because it's a casino, at least it's like organized and things like that, and you just feel like you're playing. I think for stocks, since you're trying to actually make money, it's a little more, there's a lot more adrenaline. I can't even explain it. You would have to do it yourself to see what I'm talking about. Because even when I do long-term investments, I don't even get the rush. But the fact that I know I want to get out the same day and make some money, it just gives you an adrenaline rush. And once you look at the chart, it just even brings in even more adrenaline. All right, so yeah, identify risk levels was very important. And you noticed, right? I noticed here, like, I would mark the ones that were red, like on the side, to see, like, okay, these were the most important things to do before I would trade for the day. Like, these things were very key. So I noticed number 3, I marked red. So identify risk levels was one of those things where I needed to stick to, right? So number 4, look at your day chart. That is always number 1. And what I mean by this is that there's different ways to there's different views, right? So if we go to Yahoo Finance, there's a 1-day chart, there's a 5-day chart, there's a 1 month, a 6 month. I always wanted to look at the 1 year, right, of a chart. And the reason being is because you want to see if there was any past resistance, right? Like, it wasn't enough to just look at a 1-minute chart. Like, if I said, okay, I wanted to day trade, let's just say I wanted to day trade Intel for the day, I can't just look at the 1 day chart and make decisions off that. I need to start with the 1 year chart first and work my way backwards. You always want to start with the longest form of of a chart and then work your way backwards. Okay, what was the past resistance? How, like, how recent was the past resistance? Was it 6 months away? Was it a year away? So this is very key, and this is why I had this on my trading chart as number 4. Look at the day chart, and this is going to be well before the trade, right? I'm not going to be looking at this at the during the trade. This is going to be preparation before. Again, this whole list is before trading. We make sure we do this. All right. Okay. So number 5, what is the catalyst that's making this stock go up? Now, this is specifically, and this guy, I probably should have wrote this both ways too, but at the time I think I was going long most of the time. So this is probably why I wrote this, because my strategy was a lot of them were breakouts. And that's what you're going to get for penny stocks. Like, they get these breakouts because they have catalysts that come up, and you basically take advantage of those catalysts because they're going to drop the next day, and you want to get in the stock before it comes out. And then it's almost like buy the rumor, sell the news type thing. And I wanted to make sure that I knew that there was a catalyst coming up, because again, one of my main strategies was to buy the breakout on an upcoming catalyst, right? So this is why that one was marked red, because I really wanted to pay attention to this. And even if it was the opposite, like if you knew it was like, let's say, like a popular sector in the space was the biotech sector. It was very volatile, and it's still volatile today, because like they'll get those phase 1, phase 2, phase 3 approvals, but then typically like at phase 3 the drug won't pass through, because a lot of these people claim to cure like these major diseases like cancer, diabetes, and things like that. I mean, this was back in 2015 to 2017. So, and people are still claiming to cure those things today. Like, they say, okay, I came out with this amazing drug that's going to cure this, and but then they get rug pulled, right? They do like they get one of those offerings, forget what it's called, warrants. Like they come out with warrants, the stock gets sold off, and then you end up losing a lot of money. So you could have a positive catalyst or you can have a negative catalyst. Number 5 was really like positive or negative, but at the time I was doing a lot of long trading, like going long, meaning I was expecting the stock to go up in price. So this is why I marked that one. Number 6, check to see if there was any aftermarket or pre-market movement. Number 6. So again, yeah, I wanted to see if there was any. So if I was, let's just say I was thinking about going for a trade the next day, there are aftermarket movement. Like when the stock market closes at 4 o'clock, there's aftermarket movement, and you want to make sure that you're reading that, right? Because what if a catalyst came out before market close and now the stock is shooting up? And you could see that, like in Thinkorswim, I was able to see the chart. Like if things are moving up or going down, you could see that. And then also pre-market movement. You checked aftermarket movement, but then you need to check pre-market movement. And again, I believe like the market opens like it opens at 9:30, the official market, but like people start trading around like 5 to 7 in the morning. So yeah, so that was another one. 7, use 1 day, 1 minute, and 5 minute to see trend changes. So yeah, like when I said a number 4, look at the day year chart. This was trying to just get an overall view of this like where the stock was moving to, or like where the stock has been. But 7, it was more like trend changes, right? And you could see that with the 1 minute, 5 minute. So not only did I use the year day chart, I used the 1 day, the 1 minute, the 5 minute. You got to really look at all views to make a decision for a chart. And the more you do it, the more you get used to it. So that was something that I wanted to do before trading. 8, any monthly support / resistance levels. We talked about this. This one I marked red too, because that was important. If I was trying to go long a stock, let's just say it was at $1, but there was heavy resistance at 120, could I expect it to, breach that? Well, that would depend if there was like a good positive catalyst. And sometimes a resistant level for a stock that you want to go long in is actually a good thing. Because if a stock is able to break a key resistance level, it could go really parabolic, especially if it was like a low float stock, which a low float is like two, at the time it was like 2 million shares or less, or 9 million shares or less. And yeah, like you would be able to know that, okay, if it broke this resistance level, then it would go parabolic, right? Because it was such heavy resistance that if it broke through it, it meant something would, a lot of people were buying into the stock. So yeah, that was number 8. Any multi-month slash resistance levels was very key, depending on if you wanted to go short or long. Number 9, use the volume bars to determine entry along with chart pattern. So in Thinkorswim below, like I would have to show you. I don't have, because Thinkorswim, TD Ameritrade actually got sold to Charles Schwab, and I still think they do have Thinkorswim, but you need to sign up for Charles Schwab, which I haven't, and I haven't been in TD Ameritrade in a while. So, but yeah, so you would see the volume bars. Like if things were about a pump, a key indicator was like the volume bars under the chart, and you could see it also on the level 2 as well. Again, if you don't know what level 2 is, it's kind of like this little screen on the side of your brokerage. Well, Thinkorswim had it. I'm not sure if other brokerage had it, but it showed you all the trades that were coming in from everybody. And then also like the bid and ask, you would see the bid and ask, so you could see the bid piling up. Sometimes it was if a stock was building resistance, or the ask, actually the ask side. If the ask side was building up, you would see resistance if it was stacking up. So yeah, level 2 is very important. I'm not sure if I have this on here, but this is kind of one of the things I use. I use the volume bars to determine entry along with the chart pattern. That was number 9. 10, make sure the stock spread is good. So yeah, this was another thing too. Like trading penny stocks, the stock spread was terrible. So I was talking about the bid and the ask. You know, so let's just say like you were trading a stock, you didn't want the bid and the ask to be so far apart, right? Because that just means really not much liquidity, really choppy trading. So like if the bid was like, let's just say $1, I didn't want the ask to be greater than like 102 or 103, right? Like I really want it to be like very close, because if it wasn't, it just showed that there really probably wasn't much liquidity, and it was going to be a real choppy trade, and it was going to be hard to get any like executions in. Executions meaning you probably get the execution, but you wouldn't get the price that you want. Which for penny stocks, you get 1 to 2 cents off at the money I was putting in. I was putting like $3,000 to $5,000 per trade, which wasn't a lot. That's a lot of money you're losing if the spread was that off, right? Number 11, buy on higher lows always. So again, this list, now that I'm reading it again, because again, I just pulled it from like my archive. I haven't looked at this like in years, but it just shows me that I was going long, right? So higher lows meaning, like it's going up in price. And let me see if I can, maybe Tesla would probably be a better example of this. Tesla. Yeah. So higher lows, right? So I would say right here. So you see how Tesla crashes, it goes up, and then it bottoms out, but it's a higher low, right? So it went low to 116, it went up, it crashed again, but it didn't go below this last low. So for me, that was showing that the stock had a strong chart for if it formed higher lows, essentially. So that's what I meant with that. Because again, a lot of my strategies were long, and a higher low would just suggest that the chart was going. Now this wasn't always the case, but it's just one thing I wanted to stick to. All right, so that was number 11. 12, what sector are you playing in? You need to know. And these were kind of just all these other ones, like from 12 to 20, was just me, telling myself, stick to your plan, don't hesitate. Look for long-term support. If a stock goes up fast, it will come down fast. So if we're playing the first pullback, make sure it didn't shoot past. So these are all the notes I was taking. If you look at the tracker, this is 2018. So this was 7 years ago. So this is the level of detail I was doing. And also, I would just leave little notes for myself. Don't play any breakouts. Day of only ones that you can see from the previous day. Only thing we're buying our weakness with some type of support and good risk levels. This is another note that I left for myself. I said, just be in the present and enjoy the process. No matter if you fail or succeed, have fun with the process. So these were all the little notes that I would put to myself. And I was not a successful trader. I would win some trades, and I'm going to show you some of the ones I won, some of the ones I lost. On the right hand side, I actually did purchase. This is why I always tell you guys to pay for information, right? Because on the side, these were notes that I would get from the courses that I would buy. So if any of you know day trading, you know Tim Gertani, Timothy Sykes, Stephen Dux, Roland Wolf, and obviously he has a bunch of new people that are making millions now in his thing. But it's very few, right? You some people make a few 100,000 and stuff like, but there's a lot of people that lose money. But it just shows you like the level of detail I was doing. And this is all the stuff I would do before the trade. Now, these were some like short market makers. These were the people that actually, you know, build the buying order list on your brokerage account. So I wanted to know like the short market makers and things like that. All right, so let's go to my post trades, and I think they're over here. Post trade notes. All right, so these are actually trades that I took, right? So you can see early date 2017, and I started trading before that. But what I would do, I would put certain key information, so that way I can learn from each of my trades. So I would put the date, right? I would put the ticker, I would put the sector, right? Whether it was a biotech for this one, SNGX, and we can see where that one's at now. We'll look at Yahoo Finance pretty soon. Exchange, what exchange it was on, because this was very important too. I used to trade NASDAQ, New York Stock Exchange, and then also OTC pink sheets. Those are probably the most risky, the OTC pink sheets. So I usually wanted my stuff to be on the NASDAQ or like the New York Stock Exchange. And then I would write a summary. So for instance, SNGX had a good green day on an upgrade to buy and a price set to $5 by analysts. Also good phase 2 news. Again, I was talking about biotech. You know how they get those phase 1, phase 2 approvals. And typically, if they're not making it to like phase 3 or like beyond, it's garbage. And literally 99% of them didn't make it. So like biotechs were literally like a pump and dump that you can call from a mile away. The thing is though, since they were like always low float, people thought they could short them and it would be easy, but then it would just go parabolic. I mean, I saw some biotech stocks go from like $2 to $20, right? And if you're short, I mean, you like if you don't know, like short, you could lose more than what you put in, right? Like if I go long $1,000, the most I can lose is $1,000. But if I go short something at $2 and expect it to go to like $1, but it goes to 20, I could lose like 5 to 10x, right? So that's a thing about short. But yeah, so it's funny to see like all the notes I used to write. So it says, I am holding this one overnight for a spike into threes. Did not realize this one was a biotech error on my end. So I didn't realize that I was playing a biotech. So, to go back to my, my list right here. Hold on, let's see. Watch list. Let's see. So trade checklist. So remember on my trade checklist, I would say what sector. I forget where it's at. Where is it at? Trade chart, sector. Look at overall market. Somewhere on here, I said, make sure I know the sector, right? Essentially, I don't know where it's at, but and where did this go? Okay, post trades right here. Yeah, so I said did not realize this was a biotech, and this was very important, right? Because biotechs move very fast, so it was my error to not know that it was a biotech. So and then I say what? I say I got out for a small loss during after hours. Did not feel confident on the overnight play. Didn't think a spike would be big enough. Right. So, okay. So this was a loss, right? So then on column F, I would put, did I lose or did I win? I would put the entry and then I would put the exit, right? So it was a negative 3.45 loss. And right. So this was a key too. Like I had a stop, I had a risk level and I put that on my watch list too. I think it was probably around 280 or 285. But you could see, a 10 cent move already at 3% loss. So, and then you can see here too. So this one was a win, 65 cents to 7 cents, 3%. And this is kind of what I was aiming for, 3 to 5%, because ultimately for stock trading, like you want to aim for 3 to 5% and then slowly increase the amount you go in. So I was really trading with only like $3 to $5,000. So if I made, let's just say five. Well, a typical trade was probably like 3,500. So let's just say I made 3% on 3,500. That was $122. But at the time, brokerages were charging you like $10, $12 per trade. I remember like on TD Ameritrade, they were charging you $10 to, I think it was to exit and enter. So buying the stock, I had to pay $10, and then exiting the stock, I had to pay $10. So if I made 3% on this trade, which was $122 off 3,500, $20 of that had to go to like the brokerage fee, and then on top of that, you had to pay capital gains tax, right? Because it was a short-term trade. But yeah, I mean, look at the level of detail that I went to, and it was funny reading this yesterday when I went through my share drive, because I would be really in real detail. Like RDK has good news. An architectural technology company said the U.S. Food and Drug Administration has accepted. So again, it just shows you like, you really got to be detailed when you're day trading. Now, I don't recommend, like I actually do want to get back into it, but I want to just play big boy blue chip stocks. I don't want to mess around with these penny stocks. I honestly think penny stocks are dead unless you have some inside, I wouldn't say inside information, but unless you have somebody that knows what's like going on and can give you like maybe some knowledge about, okay, this company is going to do this. I don't really see the point of trading this and this is why I left penny stocks, right? I didn't see me being successful at this. So, but again, I wasn't successful, and look at the amount of tabs that I wrote. So here's another tab that I had. So not only would I write that summary, I would take screenshots of the day chart. So you can not only see my notes, you can see, okay, here's the 1 year, 1 day chart. Remember, I wrote this on my the things I do before trading. So this was the 1 day, 1 day chart, the 1 day, 1 minute, and then notes, positive phase news, analyst upgrade. And then below, the same thing for RKDA, right? So I would write my post-trade notes, which are at the top, SGNX, and then I would come here, take screenshots, and put the actual chart, right? And you could see like these penny stocks, these charts are terrible, right? They're pump and dump, pump and dump, pump and dump, pump and dump. So for me, it's really, you got to know what's going on with the stock. And honestly, if you don't have like a newsletter that's giving you like, hey, I met with this person within the company or something like that, we had an interview or something like that, and this is going to do that, then you're really just taking a shot, in the dark, because these things will dump on you quickly. But let's see, what else do I want to show you guys? There's so many tabs I had. I had index, I had go-to strategies. So these are my go-to strategies after I read some of the courses. So midday perk, first higher low, first pullback into morning spike, breakout bounce year to day, OT first green day overnight, and then how to play them. I wrote all these out. And again, I wasn't successful. But look at all the stuff I had to do, right? So a lot of you that give up on the first day or first week of doing something, look at somebody that was not successful in trading penny stocks and look at all the detail I had to do. These are other one, Duck Short. So the guy, Stephen Ducks, look him up on YouTube right now. He's actually a very successful trader. I think he came out with like an algo or a AI automated like stuff system to trade stocks. But you know, this is the stuff, the screenshots that I got from his stuff after I read his video, and I would, you know, write it in here, take notes, add the screenshot and things like that. This is also an interesting one. So I had a daily watch list, right? So you didn't want to just go in and not, and I wrote all this, like all this you see right here was not copy and paste. Like I typed all this in back in 2018. So for the day, I'll have tickers that I was looking at. So the previous day, I would come up with this list. So this, for instance, this day was what, like 7 stocks. I would put the mark, which is the price it was at. Or was it the mark was the price that it? I think it might have been the price it started at for the day. The last price of the day, the percent change. Is that the percent change? Oh, no. Last is here, right? So last is here. I think mark, and I'm not sure what the mark, it might have been at the time of the thing, because I have 2 last here. Again, this was done in 2018, so hard to remember, but I'm thinking this, this compared to this, because this looks like a 63%, 67% change. Volume for the day, which is really important. Day two just meant like, okay, I'm going long. So this is the second day that the chart is moving up. And that was very important too, because if you had a stock that was on its 4th day of moving up, most likely a crash was coming pretty soon, right? So, I mean, if you just look at all this data, right, you really need a lot of data to day trade like this. And this is why I didn't, not that I don't think day trading could be profitable, but if I get into it, I'm really going to do it a different way, and I'll get into that soon. But yeah, look at all this data. I mean, look at the watch list. This is the things you need to do, not only for day trading, but just anything in general. You need to be very detailed on how you do stuff, and you're not guaranteed success. Like I didn't, you know, you look at my post trades. Let's look at how many times I lost. So I lost, I won, I lost, I lost, I won, I lost, I won, I lost, I won, I won, I won, I lost, I won, I won, I lost, I lost, I won, I broke even, right? So, you know, decent amount of gains, but honestly, net, I didn't make much, right? Like I didn't make much. And this is kind of when, like 2018, at the end of 2018, this is kind of when I got into crypto, right? And I was like, okay, this stock trading is not working. So that's also an important thing too. You want to give stuff enough time to work. So I did it from like college. So I ended college from 2012 to 2015, and I was trading in college, right? So you could really say I was trading, let's just say from 2013 to 2018, so 5 years. And I paid money for courses and things like that. So you really want to give stuff the chance to work. But then the opposite side, you want to say, okay, this is not working. I need to pivot. And that's when in 2018, I transitioned to crypto, and I was a lot more successful in crypto, right? And that's why I talk about crypto a lot on the channel, because that's something I'm a lot more successful in. But you also want to show like what you lost in, right? Because even though I lost in day trading and I didn't really have much success, I learned a lot. I learned how to read level 2. I learned how to read charts, technical analysis. I learned how to do research on a stock. So, you know, I didn't really take it as a loss because I gained a lot of experience. looking at it now. But during the time, when you're losing money and you're losing $200-300 a trade, or whatever, winning a little bit of money, you don't really think of it as a gain, right? You look at it like, dang, I just lost this money. Let me try to go make it back, and then you end up losing more money. But yeah, now when I get back into day trading, I'm not going to day trade, right? First of all, I'm going to be buying stocks because I actually think they're quality, and I'm going to take larger positions. What I learned in day trading, like if you see, like most of my losses were like, or my gains were like 3 to 5%. And the problem with going in with $3,000 to $5,000 is that you need to get that whole like you need to be in the stock so long to make the money you want to make. Because essentially I wanted to make $100 to $200 a trade, right? So let's say I'm put $3,000 to $5,000 in. I needed to wait for the stock to go up like 10 to 20 cents, or in some instances 30-40 cents to make the money. If you put a lot more money in a quality stock, you don't really need to wait that long. And the less you have to wait in a stock, the lower the risk, right? So the next time I get into day trading, I'm probably going to be taking like, $30,000 to $50,000 positions, and then just, probably hold it for a week or two. But that's going to be the trading portion of my portfolio. I don't see myself doing like getting out in a day unless it hits my target and I meet that. But I'm not going to be trading these penny stocks where it's like, they're really not proven. Their market cap is really low, and there's a lot of risk for me to lose money. I'm kind of like out of that era. That was another thing too. Like I wanted something more stable. So that's why I said, and crypto is very volatile. Some people be like, oh, well, you went from stock trading to crypto. That's different. Well, no, like the blue chip crypto assets, like the assets that are actually doing stuff. Obviously, there's a lot of rug pulls with meme coins and so on and so forth. But if you stick to blue chip crypto assets, I think that's quality. And when I transition back to stocks, I've been telling you guys, okay, at the end of the year, I'm looking at Dell, right? So actually, let me share my screen again. Give me a sec. So now I wouldn't mind trading a stock like Tesla, right? Because for the most part, it'll come back. So let's say I traded Tesla like at 400 and I thought it was going to go to 700, but it really crashed all the way down here to 140. Well, it came back, right? So you can either hold that position or you could take a loss. But, when you're trading with blue chip stocks and they actually have a company behind it, you can hold on to a position longer. And if you're really not day trading, you're saying, okay, I want to hold this stock for the next 2 months because I think it's going to go up. I think that's it's way more viable option than trying to day trade each day. I think you can time 2 to 3 month movements a lot better than a day movement. And it's just facts, right? Like you could see a trend. Like for here, like when Tesla went down, you could see like, okay, from here to here, it was very overextended. So it was due for a correction. Now, can you always tell that? No, but it's a lot more apparent when you look at it from a 2 to 3 month perspective. So I don't think I'll ever go back to day trading unless I was in something and it just went up 100%. It was just, it was like I just needed to take profit because the profit was just so great. I don't think I would ever do day trading again, but I just wanted to show you guys the process of a non-successful trader. So just imagine what a successful trader, you probably have to be even more detailed. But stocks that I would like to get into, like at the end of the year, one is Dell. And I actually didn't see that Dell crash. It was like literally at 120. But I think this is going to be a really good stock for the future. $79 billion market cap. So it has that staying power. Dell has been here since I think it's been here longer. The chart says 2017, but I think they did something, and it doesn't show like what it I think it was around like in the early 1990s. But yeah, they're getting into AI. So here it's going to be a long position. For me, I'd rather get into year positions like, okay, I'm going to buy this stock at 113. In a year, I think it's going to be at 220. See, that's better for me. I can't really deal with the anxiety that comes with day trading. And I didn't really see it. Now, there's some people that can do it. And again, you'll see people online saying, okay, here's my screenshot of how much I made for the day. But a lot of people won't show you the losses and be transparent and say, hey, this didn't work out for me. Because for every one person that it worked out for, there's probably another, 100 people that failed and lost money. And that's another thing too. Usually with day trading and stuff like that, somebody has to lose in order for you to win. But yeah, that's pretty much it. I wanted to share that. It was very interesting to see my old notes from day trading. I wasn't a successful day trader. I know you saw the title. You're probably like, thing, but that's kind of what I needed to do to like. I think what in total I probably lost like $3,000, $4,000. So in order to lose that, and to me that's a small amount. So to lose that little of amount and not lose a lot more, look how detailed I had to be, right? But yeah, that's pretty much it. Thank you guys for tuning in. Please hit the like and comment, subscribe, and I'll see you guys in the next one. Take care. Ooh, did anybody leave any comments? No. All right. Take care.